Good morning, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. Today, we're going to be talking about Strategy's convertible bonds and explaining them, or as I like to call it, how Michael Saylor turned Wall Street into his personal crack dealer. Now, the age of the convertible bonds for Strategy seems to be over, in the sense that they're probably not going to be issuing anymore. Now, that said, there is a lot of convertible debt still outstanding, and a lot of these Bitcoin treasury companies will probably be turning to some type of convertible notes. A lot of them have been Bitcoin denominated, which is interesting. So we're going to be talking about this fundraising instrument today so you can weave your way through the Bitcoin treasury company boom. Or bust more recently. But hey, if you believe in the inevitability of Bitcoin, I don't think your downside can be too much. But remember, this is not financial advice. This is financial entertainment. So you've got to understand, Michael Saylor walked into the most corrupt casino in human history, capital markets, and said, give me billions of dollars at 0% interest. I promise I'll spend it responsibly on Bitcoin. And Wall Street, all of these Harvard MBAs hopped up on Adderall and sushi grade cocaine, looked at him and said, sure, daddy, here's the bag, go change the world. Now, convertible bonds, they sound boring, right? Wrong. They're basically debt with a little outfit. They pay interest like bonds, but they whisper to investors, maybe one day you can turn me into stock if things go well. It's financial drag, and Saylor has weaponized it. He turned a bland corporate financing tool into a biblical doomsday machine that eats fiat and shits Bitcoin. All right, so what is a convertible bond? Sounds like some freaky sex move you'd hear about in a Florida motel. Yeah, we tried the convertible bond, now we can't walk straight. But no, in finance, it's debt with an identity. A convertible bond is like if a boring beige corporate bond took a couple shots of tequila and said, maybe I'm stock, maybe I'm not. Who knows? Let's see where this might go. So it pays you interest like normal bonds do, tiny little coupons, little crumbs, enough to keep some hedge fund guy in Connecticut stocked with Xanax and lacrosse gear for his kids. But here's the deal, kids. If the company's stock price then shoots to the moon, you can flip your bond into shares and ride that rocket. So a convertible bond is safe on the downside. It's like mommy tucking you in with your little bond payments, but it's rocket fuel for the upside because it whispers to you, daddy, if this thing pumps, we're rich. So Saylor looked at this Frankenstein debt equity love child and did not necessarily see a financing tool. He saw a weapon of mass Bitcoin accumulation. He said, I'm going to use this thing to buy every Satoshi in existence while Wall Street thinks they're making a safe bet. So my dearest little captains, convertible bonds are not just financial instruments. Think of them as a financial Trojan horse. And inside that horse is a screaming orange Bitcoin laser eye about to torch the entire fiat system. All right, so let's talk about why investors actually buy this garbage. Convertible bonds. Why? Because these people are sick. They're not normal. They're Wall Street psychos, degenerates in their Dockers, mainlining their Celsius and pretending to care about risk. But here's the deal. Hedge funds love these things because they get to pretend play as conservative bondholders while secretly betting the farm on a moonshot. Think of it as like ordering a salad at the Cheesecake Factory, then eating the cheesecake the size of a Buick for dessert. They can say, see, I'm being responsible. They like it because it's safe. They're higher up in the capital structure, which means if the company goes bankrupt, they get paid before the dumb retail schmucks holding stock. They also get their interest payments, tiny, pathetic like crumbs you feed a pigeon in Central Park. But hey, it is free money. Then there's the real hook. If the stock goes nuclear, they can convert it into equity and cash. And with Strategy, these folks were buying a lottery ticket on Bitcoin without actually touching Bitcoin, because God forbid they open a Ledger Nano X. No, these guys want exposure to Bitcoin in the way that moms in yoga pants want exposure to ayahuasca, as long as someone else is holding the puke bucket. So that's why they line up, kids. It's bonds for cowards, equity for the gamblers, and a free pass for every hedge fund that doesn't want their investors saying, why do you own a magical internet coin? Instead, they say, no, we own a corporate bond bond. Very safe, very stable, very normal. Meanwhile, they're secretly betting on Bitcoin going supernova. All right, so now let's flip it. Why the hell did Strategy issue convertible bonds? Because Saylor looked at the fiat legacy system and said, I can scam these scammers. Think about it. Wall Street is out here charging 22% APR on credit cards to broke kids buying Monster Energy and DoorDash tacos, but they gave Michael Saylor billions at 0%. Zero. That's not even a loan, that's charity. That's the Salvation Army ringing a bell outside of a strip club, and Saylor's the one emptying their pockets. Issuing convertible bonds lets Saylor raise obscene amounts of money dirt cheap. No equity dilution up front, no begging shareholders, no groveling to banks, just a slick little IOU that says, hey, if our stock goes to the moon, you can have some shares, but in the meantime, I'll take your fiat and go buy real money. And then Saylor basically looked at Wall Street and said, here's the deal. I'll take your fake paper, convert it into the only asset that ever matters, and by the time you realize what I've done, you'll be begging me for shares at triple the price. So why issue them? Because they are cheap leverage. They're like maxing out a bunch of credit cards, but instead of buying jet skis and a divorce, you're buying Bitcoin. And when Bitcoin pumps, Strategy is not a company anymore. It's a weaponized orange hedge fund, backed by those institutional investors who thought that they were being conservative. So this was not a financing decision. This was a 200 IQ genius heist. All right, so let's break down the mechanics. You might be asking, how does this circus actually work? Well, step one, Strategy announces they're selling a convertible bond. Boom, the hedge funds start drooling, foaming at the mouth like they just saw a Groupon for underage interns. Step two, then investors hand over billions of dollars in fiat. And not even good fiat either. This is printed monopoly money fresh off the Fed's money printer, sticky with J-Pow's fingerprints. And then step three, Strategy just takes that cash and doesn't waste time with nonsense like investing in research and development or building shareholder value. No, they go straight to Coinbase Pro and slam the orange buy button like a maniac at a Vegas slot machine. So step four, if Strategy stock price rips higher, these bondholders get to flip their debt into equity and ride the rocket. Yay, capitalism. If not, they just sit there clutching their tiny little coupon checks like divorced dads holding on to alimony payments. And then step five, Saylor keeps stacking sats like Pablo Escobar stacked bricks of cocaine. The entire fiat bond market has been hijacked and funneled into Bitcoin. And remember, now that Saylor has all these preferred offerings going on, that's more funnels into the bond market. So the mechanics are pretty simple, folks. It's a money laundering scheme for the ultimate orange truth. You take fake dollars, you issue a boring debt instrument, and then you turn it into the only thing with actual value in the endgame. Think of it as a pipeline into the pool of capital that is the bond market, fiat in, Bitcoin out. Wall Street thought that they were funding some software company, but wrong. What they actually funded was a religious cult with a Bitcoin balance sheet. So here's where it gets really fun. Let's look at the actual clown car of convertible bonds that Strategy has in the market. If you look at our 2028 convertibles, you know it was only $1.01 billion at a 0.625% coupon. Do you understand how insane that is? You can't even finance a used Kia at that rate. These guys lent him $1 billion for free so he could YOLO into Bitcoin. And then the 2029 convert is $3 billion at 0% interest. Zero. Nothing. You don't even get a stick of gum. This is like giving your ex your debit card and hoping that she doesn't drain it. And Saylor drained it all right, straight into Bitcoin at a $92,300 price. Gee, I wonder if that one was worth it. Convert 2030A was another $800 million at 0.6%. Again, chump change. This is like charging rent with fake money. And then look at this. The 2030B convert, a 0% coupon, $2 billion. Wall Street, ladies and gentlemen, these psychopaths gave Saylor $2 billion at no interest while middle America is paying 30% on credit cards at Kohl's. The 2031 convertible is $604 million at a 0.87%. That's just an insult. That's like leaving a $5 tip on a $400 bill. And then the 2032 convertible, we have a 2.2% coupon with $800 million raised. Okay, finally a little bit serious, but still that's less than what broke kids are paying for Klarna installments on their Yeezys. So just look at the math here. You have $8.2 billion in notional, market values exploding, and all of it backed by a laser-eyed genius who turned corporate debt into a Bitcoin black hole. Every one of these issuances is basically another hose that Saylor has attached to the Federal Reserve's fire hydrant, siphoning the fiat into cold storage. All right, let's talk benefits and risks, because every good financial scam, innovation, has two sides. Benefits first. Strategy raised billions at basically 0% interest. That's not just good, that is biblical. That is Moses parting the Red Sea financing. No dilution up front, no groveling to the shareholders, just cheap debt alchemy turned into a terminally appreciating asset. And when Bitcoin rips to $250,000, this becomes a leveraged orange hedge fund strapped to a rocket. But then remember the risks. Debt is debt. Coupons don't care if Bitcoin is up, down, or smoking crack behind a Waffle House. You've got to pay them, but really, who cares? Because I think the debt that Strategy owes is like 11% of their net asset value. If Bitcoin crashed 80%, I reckon they'd still be fine. So if Bitcoin ever crashes below that, which, let's be clear, I don't think that. I'm wearing an orange tie. So if that was the case, though, the leverage becomes a shotgun pointed at your own face. These bonds can convert into equity, diluting the hell out of shareholders, and if things go really bad, the bondholders aren't cute little bag holders, they're higher up the food chain. They'll strip the carcass before retail even gets to sniff it. So yeah, the benefits: free money, massive Bitcoin exposure, shareholders become cult members chanting HODL while Saylor baptizes them in orange Kool-Aid. The risks, sure, sometimes volatile, maybe dilution, debt service obligations, the possibility that the worst bear market in history turns Strategy from a Bitcoin war machine into a corporate obituary in the Wall Street Journal. But that is kind of the tightrope. It's either genius or it's suicide mission. And right now, Saylor's walking it with a black suit with his laser eyes glowing, with billions of dollars in Bitcoin strapped to his chest like dynamite. So this whole thing is totally brilliant, in my opinion. Remember, this was the most boring instrument on Wall Street, and Saylor turned it into performance art. And why is it brilliant? Because he literally hijacked the bond market. He took their fiat garbage and converted it into an unstoppable orange fortress. He leveraged the system against itself. It's like robbing a casino and using their own chips to buy the casino. That's 200 IQ villain energy. And with this debt, he brought leverage, he brought volatility, he brought liquidity to the equity. He brought the options traders. Let's go. We need more debt. Come on. Now, why is this controversial, though? Because the analysts, yes, the analysts, the khaki-wearing zombies on CNBC are crying. They want Strategy to trade at a 1-to-1 ratio with the Bitcoin net asset value. They want, this isn't rational. This is a bubble. Oh, really? You think enterprise value is based on rationality? Have you met the stock market? Tesla's worth more than every car company combined because Elon smoked weed on Joe Rogan. Nvidia went parabolic to a 50 price to earnings because nerds can't stop buying AI girlfriends. Sentiment is the market, and Strategy is sentiment on steroids. It's not just Bitcoin, it's leveraged Bitcoin wrapped in corporate debt, juiced with retail hysteria, and sprinkled with Wall Street degeneracy. That's why it trades at a premium. It's a cult stock. It's Bitcoin with the ticker. So yeah, brilliant because it weaponized bonds into Bitcoin. Controversial because it pisses off everyone still pretending the market is about fundamentals. Strategy is not a company anymore, kids. It's a financial LSD trip on the balance sheet of a software firm. And once you see it, you cannot unsee it. I hope you enjoyed learning about convertible bonds. Smarter web companies doing coin-denominated convertible bonds, which is interesting. So is Capital B across the pond. Pretty rad stuff, I must say. And does this invite short seller attacks? Maybe, but hey, that's part of the fun. You're buying Bitcoin, a scarce asset at the end of the day. The short term is noise, folks. I want to use leverage to buy more Bitcoin. Now that said, remember, this is not financial advice. This is financial entertainment. My name is Adam Livingston. I am the Bitcoin Wizard. If you enjoyed this content, please like this video, subscribe to the channel, and have a terrific day, kids. Class dismissed.